Bitcoin mining becomes even more important because it's just going to increase the volatility of energy prices.
Right. So what happens is you have this heavy energy investment focused on this 99.999, right? And but to make that happen and that to be always up, there's a lot of bleed, right? And that bleed needs to be should be soaked up, otherwise it's lost revenue, right? No, it's like I can't remember who says this too, but like, you know, Bitcoin mining adds suspension to the energy system.
I think that's a great way to put it. Honestly, I could do a whole. We could do an hour segment of. I feel like the whispering sweet nothings about Bitcoin mining is my favorite pastime. You know, the Bitcoin mining is the inverted battery of the grid. You know, all the. But you actually raised a great point there with the HPC data centers and stuff, which is that interestingly, like that. I think for a lot of them, the standard contracts actually are pass through power, but you pay a fixed rent per month for like rack space or for kilowatt, like per kilowatt of capacity that you have the right to use. And so there's like if it's training LMs, it can be very like spiky. If it's inference, maybe it's more stable. But like we're talking, the beautiful thing about an ASIC is that it's going to pull, 3 kilowatts, maybe a little more in the heat, maybe a little less in the cold or whatever. And you can adjust that obviously, but it's a different load than even a traditional data center in a way. And there some of these stupid Telegram groups we have. I do think there's eventually, I think you're going to see Bitcoin mining saturate the HPC data center market too, because that way, if the data center can always be pulling the same amount of power, that could be beneficial. And so if you have like Bitcoin mining load balancing within the data center to make sure that the full data center is still pulling a consistent amount of power, I think that could also be hugely valuable. But I don't think no one has built this yet.
Well, it's why we've been talking about it for years now. The Bitcoin mining space is like eventually the energy companies themselves will do the Bitcoin mining, right? It just makes sense for that very reason. Like, if I'm the energy company, there's no reason why I just say I go sign a deal with some HPC, and have some great AI data center there, really good revenues on that. But then also soak up the rest of that with additional revenue for myself and not have to share it with somebody else, right?
How far away do you think we are from that? Like, there's a bit of a learning curve. Bitcoin mining is not super easy. There's many such stories of, private equity or whatever coming to Bitcoin mining thinking that you just plug it in and it goes. How far away before, we start to see the big guys, Exxon, I don't know, say like
BP, Shell.
Yeah.
Somebody was telling me today that BP is mining now. I don't know where. I don't know. That's not verified. And I was like, okay, that's news to me.
I'm fascinated to see, are they going to do this in-house? Are they going to partner? Are they GVs? Are they bringing in experts?
It's a great question. And I think it's probably a transition period time too.
Yeah.
Right?
Yeah.
But I mean, it's still years. I think it's still a few years away.
Yeah.
We'll see.
I think the bull case for BP and the big energy companies doing it themselves is that they have the lowest cost of capital and like the strongest balance sheet. Like they could, fund this just without even having to raise money. I think the alternative case for JVs or even for Bitcoin, them not going into Bitcoin mining is just sort of tranching out of risk. Like if you're BP, would you rather have someone sign a PPA with you to consume your gas for like a fixed, price per MCF and just have that certainty baked in? Or would you rather take on like the ASIC risk yourself and all this operational hassle? My gut is actually that they might prefer the latter, because like what they really just want is sort of like the reliable revenue. Like BP already spends all their days trying to hedge all their commodity exposure anyway. I imagine they don't want to add another volatile commodity to the portfolio, so they could basically have it naturally hedged if they just someone's like, hey, I'm going to pay you however many bucks per MCF fixed. And then you could we had this one deal with off-grid hosting where we basically agreed to like if the price of natural gas went up higher and it makes more sense to just send that gas to the pipeline versus burn it to mine Bitcoin, then we would do that. And like kind of have a sort of profit share there too. That could be another way to do it.
Where are your sites located, by the way? Are you in the U.S.?